Hey guys, we're back with another episode of the TCPA podcast. If you like our videos, hit that like and subscribe button. It helps the algorithm build our channel. We want to continue to provide you guys valuable content. So we'd really appreciate the support of the channel by liking and subscribing all the future videos, including this one.
hmm Um, and so in our last podcast, we went over some business tax planning
Mm-hmm.
ideas. And this stuff is really important just to maximize. Some of them maximizes what your business is able to keep in terms of cash flow, because by um, sort of deferring taxes or pushing them down the road, you can reinvest in your business and really kind of get that ball rolling in terms of developing your product or your service. Um, so we wanted to touch on some of the business tax credits, and I know last time we touched on the research and development credits.
Mm-hmm.
That's a big one. There's also the work opportunity tax credit, and then the small business healthcare credit. There are a few energy efficient credits and state specific credits. So based on the state that you're in, your business might qualify for some credits, and then in other states there'll be different ones, of course. Um, Going back to the energy efficient credits, the government likes to incentivize businesses that use energy efficient property.
Mm-hmm.
Now, this has some ties to your individual tax return. Those of you who purchase like an energy efficient, like air conditioning unit,
Mm-hmm.
um,
Windows,
windows,
EVs,
yep, solar
um,
panels.
charging stations, at-home
Mhm,
charging stations for your EVs. Those all get added
mhm.
as personal credits.
Yeah, and the idea behind that is, the government wants those types of energy saving equipment to be found in your home and used for your business.
Mm-hmm.
And so they provide that little write off for you. Um, and then the small business healthcare credit. So we're going to touch on this a little later in today's podcast, but providing healthcare for yourself and for your employees is,
Mm-hmm.
first off, just important from an HR perspective.
Mm-hmm.
But there are tax laws that allow you to deduct those expenses, and that can help to reduce your bottom line.
Sure. Yeah. As a shareholder of your business, especially as an S corp C corp, you definitely want to take advantage of those basically medical insurance that you have. Normally, you'd take that. You'd pay it. If you didn't have your own business, you would just pay that, and it's not a deduction, but paying it through your business. That's the big key component. Is you want that payment to come out of the business bank account, and you want it to be under your business name. So then you can take that as a shareholder deduction for your medical insurance.
Right, and that's something that happens too. Going back to keeping your cards clean.
Mm-hmm.
If it's a business card, use it for business. Can't stress that enough.
Sure.
It's always fun when a client says like, "Oh yeah, like I paid my sales tax on a card that I opened last week,
Yep.
that my
Mm-hmm.
wife opened last week,"
Sure, sure.
and
Or
we have
that was
no
on an
idea.
account that got closed down and now I don't have access to it, but I still want to take it
Yeah,
anyway.
and it's like,
There's
yeah,
we hear it all.
it's and especially from an audit perspective,
Mm-hmm.
you're gonna have a much more comfortable time going through an audit if that were to happen, if
Mm-hmm.
everything is done on a business card. And then for these credits, it's just easier to pull the receipts to get
Sure.
those transactions.
And guys, at the end of the day, I mean, we're going to advise on a worst case scenario. With my legal background, I'm always going to advise. If I were the IRS, what kind of things would I be looking for? And I think that's the best way that we help our clients is that we kind of put ourselves in their shoes. And if it's something that we ourselves wouldn't want to fight, we wouldn't want to put our clients in that position anyway either. So that's super important to know. When we advise things, we are advising on a worst case scenario. If you were to be audited, is it something that we feel that you have a chance of beating? And a big way of beating that is having clean books, having substantial backup for taking those deductions.
Right. Just never try to take something that you don't have a receipt for,
Sure. Yep.
and you'll be much happier down the road.
Yep.
Um, and then another big way that you can kind of reduce your taxes, or in other words, um, kind of allocate your income a little bit differently, is by hiring your family members.
Mm-hmm.
So the standard deduction for 2023 is $13,850,
Mm-hmm.
and that's for if you're filing single. The standard deduction for married filing jointly is $27,700. So by basically, let's say you hire your teenage son, he's
Mm-hmm.
going to help with the business. Now, it is important that they do, participate in the business. You can't
Sure.
just,
Mm-hmm.
cut them a check. So make sure that they're doing maybe some admin work, cleanup,
Mm-hmm.
something
Mm-hmm.
like that. And that way, you're just protected from that type of risk. And the idea behind that is they're able to deduct up to the standard deduction. So you should and can pay them up to that 13,850 number, and that way it kind of shifts some of that income to your kids, which,
Mm-hmm.
let's be honest, you're going to be helping them out anyways with
Sure. Mm-hmm.
college and
Mm-hmm.
cars and whatever it is.
And a big thing that we've been pushing with our clients is, you set up payroll for them, but now that they're on payroll, you can also set up a 401k. You could do a Roth. So it's super important to talk to us about, getting your children on payroll. I know one of the questions I always get is, what is that age that, I should start to put my kids on payroll? I have a 4-year-old. What can I do with that? With the IRS, it's at the end of the day, it's what you can prove. So having a 4-year-old do admin work really isn't
Mm-hmm.
something that would probably pass. But at the end of the day, if you have a child that, say that you do modeling or any type of marketing, your clothing, and you put that child in your videos, there's really nothing from an IRS perspective, from an age limit, that's preventing you from doing that. At the end of the day, it's just you need to have that documentation to show why you're taking those expenses that you are. So always keep that in mind. I know me personally, when I advise on, what age, I always like to tell people around 13,
Mm-hmm.
anywhere from 10, 12, 11, definitely 13, because 13's, it's an arbitrary number. Again, there's no set deadline or a
Mm-hmm.
requirement with the IRS, but it's a lot easier to, tell the IRS your 13-year-old is helping you with bookkeeping as opposed to your 5-year-old. So,
Right. Unfortunately, Jordan and I moonlight as models. So if you
yes.
do, if you need, some advertising,
Sure,
um,
absolutely. It's our side hustle as
right,
opposed to you know other
uh,
endeavors that we have
right,
going on.
right. It keeps us off the pole.
Yep.
So the other thing is when you hire your family members, look into getting one of those FICA tax exemptions. So
Mm-hmm.
the qualifications can vary for that. But that's just another thing that can kind of help lower your overall
Mm-hmm.
tax expenses. Um, and I feel like one of the biggest benefits of this is it really is just a nice way for you to help your kids, have a little, almost an allowance,
Sure.
while still being beneficial from a tax perspective. Um, and then of course that compensation can is very flexible.
Mm-hmm.
You can always adjust those numbers based on
Mm-hmm.
how much they're actually participating. Employee benefits. So you can deduct a slew of employee benefits, including health insurance, retirement plans, which
Mm-hmm.
includes 401k, IRAs, paid time off, educational assistance, and flexible work arrangements.
Mm-hmm.
So these deductions, they're all going to show up essentially as expenses on your profit and loss. But once again, it's a great way to make sure that you're covering all those bases in terms of HR and giving your employees what they need, but then also making sure that you're writing them off, because that can
Mm-hmm.
be, and usually is, one of the larger expenses overall.
And I know me personally, I've worked with a couple clients that incorporating educational assistance within payroll. That's a huge um, not really a loophole because it's it's all within the legal confines of
Hmm.
IRS code. But if you do have either an employee or a child that you're trying to incorporate their tuition payments and trying to figure out a way to put that within your business write-off, super important that you reach out to us and we do a meeting specifically on that
Hmm.
because the requirements are they're subjective. So I think it's important that, we at least chat with our clients about that so we can know the specifics of, you know, what exactly they're going to school for, what
Hmm.
classes they're taking, and then how that then correlates to your business to have a write off. So that's super important to connect with us so we can help you just kind of prepare the best that we possibly can.
Yeah, and also, not to confuse educational assistance with continuing education, because like Jordan was saying, this is a specific scenario where, you're working with a college or university, and you're saying we're going to help you pay for your education.
Yep.
Continuing education, I feel like it's more of a gray area,
Mm-hmm.
but it's also something you can write off,
Sure, absolutely.
because it might be a
It's
conference or.
conferences, coaching programs.
Mhm.
Those are things that are a little bit more cut and dry. I would say. It's um, maybe the only question that some of our clients have is should that person be 1099 or not. Um, Real
Mhm.
quick, if that coach is operating as an S corp, you don't 1099 S corps. If they're sole proprietorships or disregarded entities, you do want to file a 1099 so you can write that payment off. But at the end of the day, quick side note: if you're giving anybody any money, it's always important to get a W-9 form filled out because it kind of saves you the headache on the back end trying to get that during tax time. Asking for it when everybody's preparing for taxes is not as beneficial than asking for it before payment is even sent to them. So we
Mhm.
definitely recommend that if you're giving anybody any amount of money for coaching, it's always important to get that W-9 filled out.
Yeah, and also because the only exception I think is if it's like a legal, like a law firm,
Correct.
that one
Yep.
can be an S corp.
Correct.
But even if you just get in the habit of saying, "We fill out this W-9,"
Yep.
maybe you go to a conference and they say, "Oh, we have an S corp set up,"
Sure.
whatever.
Sure.
Then I feel like it's good to just get in the habit.
It should
Worst
be
case scenario,
protocol for your
yeah,
business. If you get in the habit of doing it, it's not something that you have to think of at the end of the year to do.
yeah,
Just kind of make that an everyday process of your business before you pay anybody.
right. And then also with the retirement plans, just wanted to touch on. If you want to set up, some of your employees might be asking for, do you do a match? And that's
Mm-hmm.
always a good
Mm-hmm.
idea. It can be a huge incentive. And then you can kind of work that out with your payroll company.
Mm-hmm.
Fortunately, we're fortunate to have someone kind of in house in the same building that helps us out with retirement plans,
Yep.
401ks, and
Yep.
stuff. But that can be definitely a big expense.
Yeah.
Um,
Absolutely. Moving forward, another big deduction for people. We wanted to touch on it because it's important, but it's so important that it probably needs its own separate video, especially for our real estate clients and our real estate investors. It's the cost segregation studies. Cost segregation is essentially you're taking the accelerated depreciation for that asset. Most of the time, it's a property or a building. If it's supposed to be over, 30, 39 years, you essentially take all of the assets within that building and you accelerate them to take them in the first year. So whether it's, HVAC, the plumbing, electrical, roofing, and everything in between, really, really is a huge tax saving strategy for some of those taxpayers that have kind of exhausted all business deductions. If they have a property that they own, it's a huge tax maneuver to save at the end of the year.
And correct me if I'm wrong, but the process for that basically you're going to have an appraiser that'll go in
Mm-hmm.
and kind of itemize everything.
Correct.
And then you're going to have the legal document for the cost
Mm-hmm.
segregation. And then in terms of what we do as the CPA firm is we
Mm-hmm.
take that legal document and we'll classify it in the tax software so that it kind of splits every asset accordingly to how
Mm-hmm.
quickly it should be depreciated.
Correct. Yep.
And then that way it kind of saves you from depreciating everything over such a long period of time. And
Sure.
maybe you need the cash flow now. Maybe you need to show higher
Mm-hmm.
depreciation
And it's all
earlier.
dependent on the asset too. Residential is different from commercial. Commercial is different from different equipment that you have. So it's important to let us know specifically what that asset's being used for, just so we can best advise on that. But yeah, you're correct. And you have it's a third party intermediary that basically
Gotcha.
does that study, and they provide all that documentation. That's something that's super important. I don't really know of any CPA firms that do that in house. I know we do not do that in house. We have a few recommendations for different companies that do that we know that do a very good job. They're pretty aggressive in doing those cost segregation
Hmm.
studies. Now, at the end of the day, you're paying for that service for them, so
Hmm.
it's important to know that you are getting your money's worth to do that. A lot of people they want to do cost seg because it's a sexy thing. We're talking about it. You see it on TikTok and Twitter.
Right.
At the end of the day, it needs to be cost effective for you to do the cost segregation study. Me personally, I don't really know how cost effective doing it on a personal residence is. A
Right.
lot of times, this is going to be on, anywhere from commercial units are considered 4 units or higher. So, you know, quad or, especially
Yeah.
a multi-unit when you get, 50 to 100, 200 units, that's really where these cost segregation studies really come effective for a taxpayer.
And then they start to make more sense. And really, the goal is we want your business to have more cash flow now.
Sure, exactly.
And so, that's again going back to it's an aggressive tactic, and so
Mm-hmm.
it's worth going to the right people to help you
Yep,
navigate
exactly.
that
Mm-hmm.
process. Um, and so, hopefully, today's video was helpful. If you have any other parts of a business return or business what am I trying to say? Uh, if if you have other things in terms of business tax planning that you'd like us to cover,
Mm-hmm.
please leave them in the comments below. And again, like, comment, subscribe. It really helps us out with our channel.
Mm-hmm.
Um, and tune into the next pod.
Thanks, guys. See you next week.